Today we're going to continue on, of course, with the riders. One of the most popular riders, particularly for that higher net worth type of individual, is what we call residual benefit, a residual rider. When you see the word residual, really what we're talking about, a residual is what is your, what we call percentage loss. In other words, if you only worked 1 day a week, for example, it's therefore it means you didn't work the other 4 days. So basically, if you do the math, you'll see that you're only working 80% of the, you're losing 80% of the time. So you're only making 20%. So if you're only working 1 day a week, then your percentage loss is 80%. Of your income. If you're only working, let's say, 40% of the times, for example, that means that you're losing 60% of the time. So your percentage loss is 60% of the time. Okay. So basically, when we talk about residual, it almost looked like regular disability definition. If you remember, with regular disability, we said that for every dollar that your employer pays you, we deduct it from what the insurance company pays you. So therefore, it's a direct linear deduction. So if you have $5,000 from the insurance company, but now you're gone back to work and you make $1,000, the insurance company will pay you $4,000. So that would call a linear decline and everything else. Okay, but here we're not talking about a linear decline. Here we are really talking about a percentage loss. So everything has to be converted to a percentage. Right? So let's say in our example that when you were totally disabled, whatever that definition you had, okay, total disability, we started paying you after the waiting period. We paid you $5,000 a month. So consistently you get your $5,000. Now you go back to work, but you're not working full-time. You're not capable, for whatever reason, not capable of performing full-time employment and everything else, but you're able to do some of the work and everything. So the question now is, since you're still basically disabled and you do have this particular rider, how much will the insurance company actually pay you from because of that partial disability, so to speak, okay? So the formula is really quite straightforward. It's what were you earning before your disability. So let's say in this example, you were earning $10,000 a month prior to your disability. What were you earning after your disability? In other words, you've gone back to work, you're still somewhat disabled, but you are making an income. So in our example, let's say you're making $5,000 a month in that, divided by the original earnings, okay, before your disability. So there's your 10,000. So what were you earning before? 10,000. What are you earning now? 5,000. And then divided by your 10,000, which was your original earnings and everything. So you have a 50% loss. So what happens now is the insurance company will pay you 50% of the 5,000. So here's your original $5,000, but you only have a 50% loss. So therefore 50% of 5,000. So you're going to get from the insurance company, you're going to get $2,500. Okay. So a general rule of thumb here is that if you lose between 20 to 80% of your income, basically, is where this residual really kicks in. In other words, 20 to 80. So if you have this number, if this number shows up 90, then it won't work. Okay, it has to be sort of between 20 and 80. So in our example, basically, in this case here, you've lost 50% of the income. So 50% of $5,000 is $2,500. So that is your disability portion. If the question on the exam shows up and says, what is the total income, then you have to go one step further. The total income for this individual is the $5,000, okay, that your employer is paying you, okay, your employer is paying you $5,000, and the $2,500 that the insurance company is paying you. So now your total income is $7,500. Okay, so basically this particular formula is used widely by most companies, predominantly, like I said, for the white-collar workers, predominantly for the high-end net worth clients, things of that nature there. We use that residual. So remember that when you think of residual, think of percentage loss. So we'll leave it at that moment, and we'll come back to you shortly.